Welcome to Trading Lounge and the gold and silver Elliott wave analysis for the 19th of October. So, as you may know, we are looking from wave 4 here to wave 5 here of 5 of 3, and we're looking at 1 and 2 and 3 and 4 and up for wave 5 here. Now, wave 4 at times can get rather complicated, and it is possible, and I want to look at today, I want to be practical, and I don't want to be fixed on being long or being short, but I want to look at both sides of the market and take it from there and look at where we can go long or we can go short. So as I mentioned, wave 4s can get complicated, so we may end up with a wave 4 over here for this. Now, in a bit of a nutshell, the market has pulled down already to its 38.40% mark. So if we take this low from wave 2 low to the top of wave 3 here, we can see that it's past its 38.2 and down at its 50% level here. So it doesn't really need to come down any further, but it could, and we need to take a look at that. In regards to the price at this level here, the 2000, which is a major trading level, and then the next level down is the 1800, which is a minor level. So we have major levels, medium levels in the grey, and then minor levels here. And then we have sub-levels, of course, but I'm just putting these in here as minor levels 1, 2, and 3 here to make up group 1, and of course the next one is up at 2.5 there, which is actually becomes the medium level at that point because it's halfway between two major levels, number 2 and number 3 at 3000. So the pattern that we're looking for at major trading level 2 here is a classic trading levels pattern, and that means that we're looking for a pattern like this where we have the arrival and the reaction, which we've got. We're looking for the first high above the level, which will be wave 5 here, and then an ABC coming back here for wave 4, and then moving up higher from that point. So we see there's a lot at all degrees of structure. So this is it here at the 2000. We've got the arrival, the reaction. So we're in this part here at the moment. We're in the latest. We're either finished this or we're in the later stages of it. And this is what we want to talk about today. And then this move up through here, and then the move down again, and then across here like this. There is the variation of this where it doesn't drop back below the level here, but I can't really see that happening, to be honest. But you never know what's going to happen, so we just need to be open-minded. So it may not come back below the level, but I think that it will. And I think that it will based on the degree of structure here. It's not like we're climbing up within a trend here. We've finished a trend and we're starting the bearish move from that point. Anyway, let's just drill into here on the daily chart next. So we'd been looking at this here as wave 3 and down for wave 4. Now we had a bit of a triangle pattern that we could view as a triangle pattern in this space here for an A wave, a B wave, and a C wave. That could stand like that, but there's some price action in here that's suggesting that this is bearish, and this is what I need to talk about today. I know with Elliott we could look at this in different ways. We could look at this we've been over this before, but I think it's beginning of the week. We can look at it again. So we could look at it as wave B here, and then 1 and 2 and 3 and 4 and 5 coming down here. But the trouble with having wave 4 here is that it overlaps wave 1 here. It doesn't do that on the silver though. So, and we have seen overlapping wave structures before in markets that have leverage in them. We could also look at the market here as well with an ABC pattern to this point here. So in corrections with Elliott wave, we can have the guideline of alternation. So that means that the first leg here is an A, B, and C wave here, can be complex and then simple and then complex, or complex, simple, and simple. So there's different ways to look at it, and you could label them with an X, and you can do this and do and so on. But I like to keep things really simple, so I just use the ABC thing. So in this case, like I mentioned, it's probable that we would be better off labeling it like that. But for today's exercise, I've just labeled it the same as silver in terms of 1 and 2 and 3 and 4 and coming down for 5. So we're looking for 5 waves coming down into this space here for this, and then making a move to the upside. Let's go in and take a closer look at that. So it can look like this here. So wave 3 here with an A wave here, an A and a B and a C for wave B, and then 1 and 2 and 3 and 4, and then down for 5. So we're looking for 5 waves down, and we could look at this as wave 1 down here, and then an ABC pattern for wave 2 here, and then moving down for 3, 4 and 5, coming just below this level of wave 3 here. It's also possible, like our original count with wave 4 being here, but that just simply means that we can go long. We could go long above this high in here now for that. So I want to talk about all of this next. So let's go to the hourly chart. So wave 3 here on the hourly chart, and wave 4 here with an A and a B and a C wave to this point. This move down through here can also be counted in 5 waves. So we can look at this as wave 1 here, and then an A and a B and a C here for wave 2. Now, if I'm wrong, then we need to be long above here. And the good thing about this is that from that high to this low here, these tops here are the 61.8% mark here. So any breach of that, then we would be moving to the upside. The last time we spoke, I talked about this little move in here, and it counts as 3 waves in here. So I mentioned it was corrective, and that would have further downside to come from that point. The thing is that we just got a bit more complicated. So we need to look at this as the A wave, the B wave, and the C wave here now. I know that that's a little bit annoying, but it's just the way that it cookie crumbles, I guess. And yeah, let's go in and take a closer look at this. So the takeaway here is that you can safely go long above this point here. At the same time, we can look at going short under this low, but now we can lift it up to this one, because if this was going to be bullish here, let's just assume that's going to be bullish, then we'll need to look at this as wave 1 here and wave 2 here, and then wave 1 and 2 of a smaller degree, and then up for wave 3 here, which is possible. I'm not saying it's not, it's just that this here is very clearly in 3 waves here, this first leg here. So it's telling me that all of this is corrective at this point. So let's just go in and have a look at this. I don't know if I got it on the tick chart or 15-minute chart. This is a 15-minute chart, so I don't have it there, so it'll be on the tick chart. So we're just going to grab a bit more data and check it out. So that's our reference point here, that wave 4, or as I mentioned, it's probably better to count it as wave B in blue, but it's not going to affect anything at this stage, because we would still be looking for, and either one of these would still be looking for 5 waves to the downside. And we've got wave 1 here, and then we've got wave 2 sitting over here. So that pattern we just looked at was an A wave, a B wave, and a C wave. So from the top here, we're looking down at 1, 2, 3, 4, 5 for wave 1 here, and then wave 2 here, and wave 3, wave 4 and wave 5 to make wave 1 here. And this is what I was, we talked about last time that I spoke, is that it's very difficult. I mean, you can see 1, 2, 3, 4, 5 here. So we've got 5 waves from B to C here. We've got 5 waves in this leg here. So we've got an A and a B and a C wave here for the B wave. There's not 5 waves here. That's what I mentioned last week. And even though I got it wrong, sort of half right, half wrong. So because it's just become a larger correction, that's all. So we've got an A wave, a B wave, and a C wave. And I don't really care about being wrong or right. Like I said, it's just about making money and being practical. So I think it's important to present both sides. And today I'm sort of presenting more of the bearish side here. But at the same time, as I mentioned, we can go long above this high here. That's important to understand. So the markets will tell us what to do. At the same time here as well, if we pull, we don't really need to worry about the C wave here. That sort of doesn't matter either wave. Even if it's wave 1, it's still in 5 waves. So don't need to count that. But counting this one here, we've got 5 waves down through to here. So we've got wave 1 and 2 here, and then 1 and 2, ABC for 2 here, and then 3, 4, and 5 for the third wave, the fourth wave here, and the fifth wave moving down to here. So now we're looking for that fifth wave can make wave 1 here, and then the A, the B, and the C wave that can come back to the 1910 area in here. Okay. And then we'll be heading down from that point. So realistically, I mean, if you're an economist or, you know, an analyst, then, you know, you kind of need to be right. But as a trader, and this is what we do, we're traders, we just want to make money, you know. So we can really just use, now we've narrowed the problem down to this space here. Now we can make a move on this. So we can expect a bit of a rally and then to the downside. So we don't really want to do anything in this particular space here. If we get they've taken this high out here, you could get a better trade price if you use the classic trading levels pattern on the 1910, which is subgroup 1, so 1, 2, and 3, and you'd build in on the long side through these. So on 10 as tested support, on 20 as tested support, on 1930 as tested support. Otherwise, it's to the downside. And there will be a pretty clear run straight down into group 2 here for this. So just to drill out here a little bit, let's just go back to the hourly chart just to get a bit of a grip on where we're looking at this. So we can assume that if we assume that this is wave 1 here, then we can assume that wave 3 is going to be longer than wave 1. So wave 3 will take us at least down into this area here. But if we add a little bit to it, then it'll probably come down to the 50 area and have a bit of a bounce there. And then we can look at this being down here for this, which is quite a lot of deep. It's quite deep at this particular point. So maybe I need to reassess what that wave 4 is there and look at it as a wave 2 or something. But it doesn't matter for the time being. We're just interested in making money, like I said. So technically, if that's breach, we can go on the short side. If that's breach, we can go on the long side for that. So that's pretty much it at this stage. Yeah, if we have a look at GDX and GLD. This is a gold stock actually, by the way, and this is AEM, and we can see as a wave this here, we can see that we've got like an impulse wave to the downside here, and then an A and a B and a C up here. Yes, it could be up for 1 and back for 2, up for 1 and back for 2, and so on. But if I was going to go long on this stock, I would need to go long here for that. Otherwise, we can look for 5 waves to the downside. And this correction looks a little bit small. But anyway, I'm going to go to GDX first. GDX. This is the smaller, this out of the ETF, this is the smaller one. The GDL is, I think, 3 times as big or something, maybe 4 times as big. I'm not sure. But so we've got the same situation here. This one counts... this one here would have to count as an A wave here, and then an A and a B and a C wave here for the B wave, and then down for the C wave. But in the bigger picture, this can become the A wave here, the B wave here, and then the C wave down here. But it hasn't really come back down here. It's showing strength here on the 40. It's sitting at 40, which is a medium level. So that's where it's sitting there. But when we have a look at... when we have a look at GDL, which I kind of prefer because it's just a bigger, it's got 3 times more volume in it, we can see that this pattern is very much the same as gold, and because we've got these lower highs here, which can bring a trend line down through here, of course, as well. But here, what I wanted to draw your attention to here, we can look at this as the A, the B, and the C here. Yes, we could also look at it as wave 1 here and 2 here, and then wave 1 and wave 2 here. But if it drops below this low here, that's what I wanted to just point out. If gold drops, we're expecting a little rally first, but if it drops below this low here, then you will know that we're in a bearish picture at that point. Okay, and we'll probably drop to 172. So that point there, that low there, is really quite critical for the short side. Okay, so if you were long, that's where you would have a stop at that point. This is not 40 here, it's 180, which is 180 is a minor level. So it's under the level there. So if I was going to go long on this stock, on this ETF, then I would want to have the closest largest number, this one here, as the support and not the current resistance here. I mean, it doesn't have to stay resistant. Sure, it can just push up there and eventually find support, but it doesn't have support yet. Okay, I just wanted to go through those 2 particular ETFs because I know a lot of folks are in those. So now I want to go to silver. And silver. So in a nutshell, we've got the same pattern, and the point is, will we break down into this low here for this? We've had this here as an A and a B and a C wave here with a bit of a triangle pattern in here as an A, B, C, D and E in here. It could also be counted differently, as wave B could be placed up here, and we could look at this as wave 1 and 2 and 3 here and coming back for 4. Now wave 4 doesn't overlap wave 1 in this case. It's sitting nicely on this trend line here. Wave 4 typically breaks the trend channel, so it hasn't broken it yet, but it's certainly leaning on it. And this does appear to, in terms of structures, it does look like a nice third wave here, doesn't it? It's nice and strong and powerful. So let's just go to the 4-hour chart and pick it up on the more bearish count. So on the more bearish count, it would look a bit like this. So with wave 3 over here, wave A here, an A and a B and a C here for the B wave, down for 1, back for 2, and then 5 waves down here for wave 3, where we had our old wave 4, and still could possibly be wave 4. But for me, I would need support on the medium level here halfway. I'd need to take out that high, or having a nice tested support on top of 2,500 there, $25 in that case. So this is 5,000 ounces as a CFD here. So in America, you don't have CFDs, so if this is the case, then wave 4 here, then we'll be looking for 5 waves down here, and 5 waves down here, we'd expect it just to take out the low here. If the extension's in wave 3, then wave 1 and wave 5 will be roughly the same length. So we can take that on board, but we'd still want to see it come down to at least the 2-2 area, the 2-1 area in that regard. So we need to take a closer look at this here. Now, I know that this here can be counted in 5 waves to the upside, in terms of 1 and 2 here and 3 here, then an A and a B and a C here is an expanded flat for wave 4, but it does overlap wave 1 at that point. Is that here nor there? And then wave 5 to the upside. If I was going to count it correctly, then I would count this up here as the A wave here, then an A and a B and a C wave here for the B wave, and then up for the C wave. So it does count better as a corrective pattern. And we're also starting to see an impulse wave down through here. So I'm thinking that we'll see a rally, a little bit of a rally in here, and then we'll see the move down as wave 3 here, 4 and 5. That's what I'm thinking. So let's just go in and check this out. I don't have it on the hourly. I think I've got it on the 15-minute on this one. So there's our wave 4 as a reference point. Got it. I'll just go back a little bit further actually. Just go back a bit further. I'll just show you what I've done here. So as a corrective wave, I've got wave 1 to that point, then wave 2, and then 1 and 2 and 3 and 4 and 5 to the third wave, fourth wave, and fifth wave here for the A wave. I can go this way with it, the B wave here, and then the C wave up here. I can also take it to here and have an A and a B and a C wave in this case, which is also probably better. And then coming over here, but that doesn't bother me so much. This is where we need to be over here. So I can count 5 waves down through here as wave 1 and 2, and then looking at the third wave all the way down to this point here with 1, 2, nice strong third wave, fourth and fifth wave, making a new low here. This is definitely a corrective move here in 3 waves as wave 4, and then down for wave 5 here with an extension in the first wave here, and then the third, and then the fifth. So it counts okay as wave 1 to the downside, and then this counts here as 5 waves to the upside here quite nicely as 1 and 2 here. We'll take all the way up for 3, 4, and 5 here for the A wave. So I'm thinking that the B wave can come down. We've kind of already come down to the 50%. There may be another little drop here, but then we're looking for a little rally in 5 waves back to the 61.8% for wave 2. So we've got wave 1 here and 2 here, and then we start again to the downside over here for that. So we can go short below this level here. We could also lift this up to closer to the 2400 if that becomes the retested resistance here. So you can push it up there, and you can go long on top of the 2500. Now I've got the old high up here, but if you look for a classic trading levels pattern across that level there, there's the arrival, reaction, first high above the level. Wait for that reference point. That's the one that you need, and you don't, you get a bit excited when this gets pushed up through here. You're thinking, am I going to miss something? But they always fold back, so it will check back in, and then you've got that reference point. It makes for a safer trade, and you just keep bringing your position down, your buy on stop for the long trade at that point. So you can do it on the 2500, so you can get a better fit here for that. So we can just draw in a classic trading levels pattern sitting here like this. So you got your first high, your second high, so you can get a much better position here. And it's the same to the downside over here as well. So the market would come down, it would bounce off that 2400 and eventually go through it and come back up, and then that's your reference point there. So it's the same thing. It just makes for a safer trade. You can get in earlier and do whatever you need. I'm just pointing out the safer trade. So you can improve on this long entry, and you can improve on this short entry here. So yeah, the whole purpose of this video was to point out that there is a bearish element. I have been bullish, and I am bullish in the bigger picture, and so on and so on. It's just that certain things are popping up which are not sort of sitting right with me, and we just need to get practical and logical and look at both sides, and I need to explain those sides to you. So I've been talking about the bullish side, so I need to talk about the bearish side. So we'll just see come what may, but at least you kind of got you got both sides, you got a picture of both sides of the coin now. So I don't know if I need to rehash this here, but let's just go back to the 4-hour chart. So we can go long on 2500 as a tested support, so you can get a better entry than that. On the short side, we could take out that low here. But if we do get that little rally here as the A, the B, and the C wave here, then we can use the 2400 line through here, and if that becomes the retested resistance, then you can look to become short in this area much higher in this space here, and then you'll have an understanding of the structure to the downside if we're going to get that, because we should take out that low there, and that will be about it at that point. Alrighty, a long video, but I just had to get through a bit of stuff there. So let's just see if it turns out bullish or bearish. It's not about being right or wrong. It's about making money. Of course, it's nice to be right all the time, but that's just not going to be the case, is it? So getting practical and logical and taking the next logical step is what we need to do. We're in a wave 4 correction, and they can get complicated, and we may be in the middle of that, but we're certainly at the later stages of whatever is happening in this space. So that's good news. Alrighty, thanks for tuning in. Appreciate the support. Cheers.